And a very good evening. You're watching The Money Show on ET now with me, Mubina Kapasi, and here's what we have lined up today on this episode of the show. First up, we are going to be talking about the whole debate that's raging around mutual funds versus stocks. A lot of people really are losing patience when it comes to mutual funds, whereas more and more youngsters especially are very happy to go about trading with shares themselves using the latest array of digital platforms. So which ones for which investment vehicle should you choose if you're a long-term investor, especially? That's what we'll be discussing on the show. And of course, we will also be talking about the times when your insurance policy, your insurance claim has been rejected. What should you do then? What are your options? Can you, take the whole matter to an ombudsman or court? And finally, later on the show, we'll be talking about how you can renegotiate your rentals with your landlord. What are the average rentals, and if you are paying higher or lower compared to the average rental around your area? And also, for all millennials who are looking now to buy a house, what are the key things they should keep in their mind before they do that? The questions they should ask the seller or the developer. But first up, let me introduce on the show Rachit Chawla. He's the founder and CEO of Finway. Rachit, it's a pleasure having you with us on The Money Show. Thank you so much for joining in. So to start with, many have, the one thing really that should point to, people sort of expressing their displeasure, if you could call it that, with mutual funds is the way they've been hitting the redeem button. Yes, of course, I guess it's also got to do with the fact that the last couple of months people have been facing cash flow pressure, so they've been deciding to move out of mutual funds. But then again, at the same time, you're seeing more and more people trade in individual shares. Do you think that, people are sort of getting impatient with mutual funds, been questioning the ability of mutual funds to do well? What's your view?
So, Mobina, thanks for having me on the show. Let's understand what is a mutual fund. So, mutual fund is nothing but a pooled investment wherein they have a fund manager who manages money of investors. Now, when we say a lot of traders are getting into this field, it's mainly because of ease of information. Earlier information used to be the key ingredient in order to make money from the stock markets. But now information has become very easy. Moreover, technology has become very friendly in terms of to buy stocks, to sell stocks. That's the reason a lot of youngsters have started to invest on their own, and they are not going through the mutual fund route. Moreover, I see a big shift in the mindset of investors as well and traders. Earlier, stock market used to be considered like a gamble, it wasn't a very sought after field. All of a sudden, I can see that it's become a field which is sought after. People look up to traders. They have understood that it is not gambling, it's a skill. And that's why a lot of shift from mutual funds to these young traders which are coming in.
Welcome back. You're watching The Money Show. We had just interrupted our programming to address Tata Motors numbers. The conference call was on. My colleague Utkarsh Chaturvedi, of course, did ask the management on the GLR performance, which definitely has been the shining factor for the company. But let's get back on to our conversation with Rachit Chawla. We're talking about choosing mutual funds or stocks for your investing journey. Rachit, apologies for that. And we were just talking about how outflows have been increasing in mutual funds, and instead people have been choosing share trading. However, and especially the younger ones, the digitally savvy ones, who would you recommend that be a chosen path for investing in equity markets? This share trading activity, the share trading exercise, who would you recommend that path of investing for?
So, Mobina, honestly, investing directly or trading, it's a thorough professional role. I mean, this is not something people can do as a side income or maybe a passive income. So we are really comparing apples with oranges. So when you talk about mutual funds, be assured that your capital is being taken care by a professional, a fund manager who looks after your capital properly, and you can be in peace. You don't have to worry about the returns. You don't have to worry about monitoring it on daily basis. It's actually in safe hands. But when you talk about trading, it is a whole different ball game. It is actually a skill that takes time in order to be developed. And it is like any other profession. Like anybody cannot just become a doctor, right? There is a process involved behind it. Similarly, for trading, a lot of youngsters are coming to this field thinking it's a very easy job. Let me tell you, this is an ongoing process, and a lot needs to be learned before they can actually start trading themselves. So it is a slow journey, and it is a proper, thorough profession that involves money. And when money is involved, a lot of emotions are involved. You are bound to make mistakes. You continue to, learn from your mistakes, and that's how you actually become the 10% people who are actually making money out of trading.
It's not easy to get into share trading. It's a proper job on its own. It requires time. It requires careful analysis, studies, research, knowledge, what have you. However, still, like you mentioned, what is mutual funds? It's a basket of stocks selected by an expert, a financial expert who manages your money, which you give him and which you entrust. Now, many have also, in fact, we've been getting these questions as well from a lot of our viewers that, I bought this stocks. It may be L&T, Axis Bank, Tata Steel, so on and so forth. I have chosen a basket of stocks myself and I'm investing in it for the long term. So essentially, people are saying that, look, these are my stocks and I am going to be a long-term investor, but it's just that I want to invest in these stocks which I have chosen over, mutual funds. So, basically comparing mutual funds with a basket of self-chosen stocks. And I'm sure this as well is a pretty tricky one, Rachit.
Yes, so Mobina, people are open to do that, but when we talk about long term, one thing which your viewers should understand very carefully is that in the long term, capital protection is far more important than worrying about the returns you make. Because if your capital is protected, you are in the game of the stock markets. But if you try and be very aggressive or be emotional about it, or you don't do your homework, your capital can get wiped off immediately. So when you say long term, I would still prefer maybe through a mutual fund or maybe through an index. Nowadays, even the index you can buy through NAV, like Nifty 50 is available through multiple funds, which is automated. Because in the long run, these indexes will never become zero. But mind you, the stocks might become zero. Just what happened in Kingfisher, or some stocks you must have seen, which has gone out of the trading platform itself just because they became bankrupt, right? So in terms of long term, one should not get confused between choosing the stocks themselves. They should, as I said, a lot of skills are involved. They should carefully switch from mutual funds to investing in their own desired stocks. They should not do it instantly because that might burn their capital as well.
Okay, well, yeah, and it has happened. This what Rachit is mentioning is not without precedent. He gave the example of Kingfisher Airlines, but that's just one. There are several stocks, so many in the ADAG pack, so many other smaller names in the infra space that have gone absolutely bust, that now trade literally in paise. So you have to be extremely careful. 1 minute things are looking hunky dory, and then next thing, sometimes it really takes investors by surprise, especially because you have your own job, your own profession going on, and this is something that you've just done on the side. Okay, what do you think, Rachit, that for somebody who's a long-term investor, who has perhaps looking for vehicles to save their retirement corpus in, do you think that mutual funds are among the best instruments out there?
So I would recommend any instrument where your capital is being protected is the right instrument in the long term. Why I'm always emphasizing on capital protection is because when you're planning for the long term, your capital is the only instrument that will get you higher yield. And just don't go after bonus jackpots or making higher ROI. It is the time frame which is the key here. And when I say mutual funds, the reason I like mutual funds is because very rarely a mutual fund goes zero. The reason is Mutual funds are backed by fund managers and they have a bouquet of stocks. So we cannot think of all the stocks going zero. In fact, nowadays, I'm also seeing a different trend in the market wherein people have started buying Nifty 50 index as a mutual fund. Main reason is the cost is very low, it is highly liquid, it gives return, and to be honest, our indexes can never get zero. So your capital is also protected with a great upside. So yes, for a long term, either go for an index or go for a mutual fund, but do not pick stocks for your long-term goals. SIPs can never be successful if you just go after stocks, because you never know which stocks will go zero or which stocks will give you consistent high returns.
Rachit, at what point do you think an individual could dabble in individual stocks?
So it's a slow journey. Suppose you start with a 1 lakh capital and you are totally invested in mutual funds or maybe an index fund, right? Then you start becoming a trader. Now, when you become a trader or a value investor for the long term, your P&L is something which will tell you whether it's time to quit mutual funds and start investing directly or not. As I said, it's a long journey. I have been a trader myself for last 10 years. I have seen a lot of ups and downs. Sometimes your mind tells you that you are prepared, but the P&L does not reflect that picture. So let your P&L tell you whether you are generating consistent returns with your investment, with your stocks, or whether the mutual fund or index funds are beating your investments. When you see consistently for a few months and years that you are beating mutual funds and indexes, that's the time when you can actually focus on your bouquet of stocks and become an investor.
So I guess you're listening to a man with experience himself of being in the share market, in share trading for the last 10 years. So who better really than to learn from somebody with experience? Okay, on that note, folks, if you have any questions or queries you'd like to ask Rachit, perhaps of his experience while trading, or on your personal finances, you can write into us on the Money Show at etnow.tv. That's the Money Show at etnow.tv. Rachit, request you to stay on with us. We take a very short break and get to those questions and queries then.